Joining us now to discuss is Matthew Sigel. He's the head of digital assets research at asset manager VanEck. Matthew, thanks for joining us this afternoon. First of all, your reaction to this Silvergate news and what it might mean for the crypto markets.
Yeah, I mean, I think it's part of a broader trend of friction between crypto on-ramps and off-ramps. As for the stock, regulators don't generally put financial institutions out of business, and penalties for KYC infractions, for example, have tended to be quite small as a percentage of market cap. So from that perspective, we don't think it's existential from a regulatory risk. But on the other hand, Silvergate's facing some serious fundamental issues here. It's a run on the bank. They've been kicked off Coinbase, Galaxy, Paxos, also halted transfers. More than 80% of companies who get these going concern notices go bankrupt within 1 to 2 years. So there's serious book value destruction going on. Disclosure, VanEck does show up as a holder of Silvergate. That's in some of our ETFs. In our active products, we're on the sidelines on this one, see more upside in tokens and other investments.
So what can you say about Bitcoin? We're seeing Bitcoin reversing yesterday's gains, but for the most part seems unfazed despite a buildup in shorts. So potential squeeze might be in the future?
Yeah, we're getting a little bit of a bid this afternoon on these Bostic comments, Fed Reserve chairman of the Atlanta Fed, kind of hinting that rates might be able to peak out in the middle of this year. We like the setup here. The macro consensus at the start of the year was very much that Fed tightening expectations were peaking out, and that consensus has been totally questioned. Even abandoned with this new consensus of higher terminal rates because of sticky inflation and a still strong job market. At least now the market is free to question that new consensus, which it's doing right now with the turnaround for equities, at least on these Bostic comments. So maybe that's bullish. The long-term direction of travel for G7 central banks, despite whatever hawkish rhetoric of late, is that they're becoming financing arms of the executive branch of the government. So G7 bonds are highly unattractive, and that should be good long-term for crypto adoption. It's also kind of interesting to see the volatility of listed equities like Coinbase and Silvergate. Those have moved meaningfully higher, faster than Bitcoin and Ethereum and most tokens we hold. The short interest is also extremely high in those stocks. So maybe that's also evidence of this kind of further decoupling of the fiat system and the crypto system, and some extreme bearishness, at least by U.S. institutional investors who are, to the Silvergate point, being increasingly walled off from certain parts of this ecosystem because of the proposed custody rule.
Taking a look at crypto-related stocks, you say Coinbase and Silvergate are more volatile than BTC. What's the significance behind that?
The significance, I mean, it means that you need a higher return to justify a position. So it matters from a position sizing perspective. I think that there's limited ways for regulated institutional investors to get exposure to crypto and crypto-related assets. And Coinbase and Silvergate are two securities that are easy for investors to use to speculate on, and therefore their volatility is probably higher than what their fundamentals warrant. And that just makes kind of a higher hurdle for ownership.
Well, you're saying some decoupling might be happening between tech stocks versus Bitcoin.
Well, for the second month in a row in February, Bitcoin and ETH outperformed the S&P and NASDAQ. Bitcoin volatility is now lower than the S&P tech sector. That resilience in price happened despite the Voyager liquidator clearly selling Ethereum every day. So, there is some underlying bid to this market. We think it's coming from outside the U.S., overseas, Middle East, and Asia. So maybe that's the decoupling that's happening.
In terms of Bitcoin performance near term versus long term, what do you foresee?
I think it's data dependent on rates, right? Correlations are still very high. If we're looking at catalysts, we like the Shanghai upgrade, which is coming. Can speak from firsthand intentions that we'll be staking a significantly higher amount of ETH once this upgrade is enabled. Well, we love the account abstraction that was announced today from Vitalik, a major upgrade, and we think wallet providers like MetaMask are going to soon be releasing additional functionality that makes scheduling payments a lot easier. So there are still a lot of positive developments in the space.
And what are the headwinds for Bitcoin?
Stateside continues to be regulation, right? So regulate me harder, daddy. I think that was the name of the legal panel at ETH Denver happening this week. So regulated institutions here are rethinking their custody arrangements in light of the SEC's litigious posturing, but overseas, it's a different story. We like the free trade zone that was just set up in the United Arab Emirates, specifically dedicated to digital asset entities. So it's tighter regulation stateside, and that balanced against freer policies overseas.
Regulate me harder, daddy. All right, Matthew. Thank you for your analysis. That was VanEck, head of digital asset research, Matthew Sigel.